He's asking if we could find our demand and supply levels above and below current price. Let's start with the hourly chart here. Remember, this is all about having an edge, right? We don't want to do things the same way everybody else is doing it. Otherwise, you're going to be entering and exiting positions with everyone, and that's not a good thing, right? So we want to find the origin of the last strong move in price above and below current price, okay? The origin of the last strong move in price above and below current price. We do not want to cut through candles. Everybody cuts through candles. I'm going to suggest that we don't do that, okay? So when we start with current price here, 126.87, I'm going to scroll up and left until we get to this 128 area. Let's start on the hourly chart here, okay? And let's focus right in on this area, okay? We had a great trade yesterday in the trading room in the euro. We caught a big chunk of this short move. I know we have a couple XLT members in our session today, but that trade is over with now. So now let's scroll left and down, okay? And we've got a couple areas of interest below. I'm going to put these lines in. I'm going to recapture the chart. This will only take about 10 seconds, and then you'll see it, okay? Okay, let me put the others in, and then we'll go to a smaller time frame, and I think we'll be all set. So if you're in a short position now from that trade from yesterday from the trading room, we've already hit targets 1 and 2, and we did not plan out target 3. So if you happen to still be in it, you would use these demand levels below that I'm pointing out for target 3. But if you're following the rules, you probably should be out of the trade already. Okay. There we go. All right. So remember, we are not cutting through candles. Now, why do we find the origin of the last strong move in price? Because that's where the only reason why prices move in strong fashion from one area to another is because supply and demand is out of balance at those areas, right? And the reason why we want to focus on that is because where is the only place that prices turn in any market? At price levels where supply and demand are out of balance, okay? All right, Bill, good job. You had those levels picked nice. Now, the one thing, though, on the bottom here, you see we have two levels on top of each other. That upper level is a rally-based rally. Again, make sure that you understand that that is not the high probability demand picture of demand there. The lower one is the drop-based rally, okay? That's the higher odds, lower risk, higher reward picture of demand. Okay? Yeah, so Boyke, good point there. It says there seems to be many levels. There are many levels on the chart, and that's why we focus so much on these odds enhancers that we talk about. Because Boyke, if you're following all the odds enhancers, and I know we never really go over all of them in here, but that's the whole point. What'll happen is, out of every 10 levels that you'll see on a chart, you're probably 2 or 3 of them are going to meet your minimum criteria. Or I should say your criteria period to even call that a level. Okay? Not every turn in price on a chart is a level. In fact, most are not. Okay? And that's the big thing. Okay? Take a look at, Boyke, can you see my mouse where I'm pointing to right here? You see this area? I'm not sure if you can see my mouse. It's 132. Oh, you can? Okay, great. Well, you see to the right, this looks like a good level, right? You see how prices shot out of this area? But look what happens. Prices come over to the right, and they blow right through that level, right? Why does that happen, right? Like, why is this not a good level, but these ones I drew in on the bottom are? Those are serious questions, and those are important things. Well, the reason why we would never take this as a demand level, I could see 2 things right off the bat that would completely keep you out of this if you are following the odds enhancers. Number 1, there's way too many candles in this base. Remember, fewer candles, fewer activity, the greater the imbalance. Number 2, okay, if you put lines in right here, we would never be buying here because look what's sitting right above. Do you see how there's a supply level just above? So the fact that price spent too much time here and the lack of a profit margin to the first target, you would never take this as a level, at least if you're, like in the XLT program. Again, I'm not trying to push people in the XLT. I try to give you as much as I can here. But, you would never take that if you factored in the odds cancers. Does that start to make sense? Okay. Yeah, and Andre, it is after a rally, so. Okay. Okay. So the news, the news there, someone's asking about the news. I would argue that the news almost always just speeds up what was going to happen anyway. Okay? And really nothing's going to trump supply and demand. I mean, stick to your key significant levels, and if you knew the news or if you didn't know the news, from my experience, it's not gonna change things. If anything, focusing on the news too much can really hurt you. Okay? And again, I've said this before in here, but if you're dealing in spot Forex, that's like, that's where you really have to be careful, because when prices hit supply levels, the news that's being spit out to you on those news feeds is usually pretty good news, right? And when prices are hitting key demand levels, the news is usually pretty bad. Okay? Now, sometimes that news is real. Sometimes that news is just an opinion that's spit out by someone who wants people to buy because they want to sell, right? I know that doesn't sound pretty or political, but anyway, I think you get the point. All right, let's move on very quickly here, because we do have a specific topic and agenda to talk about today. All right. So that's our larger time frame areas in the euro. Okay. And due to the lack of time, Bill, instead of going 15 and 1, mind if we just do everything on the 10 here? They do have a pretty big thing, a lot of important stuff to go over. All right. Last time was more of a trading session. Time before that was a lesson day. I try to I'm pretty much in with FX Street here every other week. Try to do a lesson session, then a trading session, then a lesson session, then a trading session. So that's what I've been trying to do. Let's take a look. All right, no problem. Let's go to the 5. No problem. Here we go. There is the 5-minute chart of euro. Okay. Grab it again for you here. All right. So we start with current price, 126.78. We look up and left until we find the origin of a drop in price. And we have 2 levels here to key in on. This first one I'm gonna put lines around looks almost identical to what we rallied in yesterday for that short position. Okay? This one up here, I'm going to draw in, but just be careful with it. Okay? There's that. And let me just draw these lines in, and then I'll capture the chart again, and we'll spend a few seconds talking about it. Alright, so if you're looking for some short-term trades, on this Friday here. Remember, it is a Friday. And we are going to look at tiny time frames, Boyke and Bill. Remember, today's topic is the Forex Futures. So that's where I'm very comfortable looking at very small time frames. Okay? So here we're on a 5-minute chart of euro. If we look above current price, we see we've got this level up here. Rally, a little bit, some basing, quite a bit of basing actually. Almost a little too much, but the origin of this drop in price right here starts right up here, okay? And when and then we see the prices were, kind of attempted to come back here, but they couldn't, so that's another sign that there's probably a decent amount of supply up here. The only problem with this one is, prices have dropped so much already. But, it looks okay for a very short-term trade, and since you're asking for a 1-minute chart, I'm assuming kind of that you're looking for these little bounce trades off these levels anyway. Then, of course, this upper one up here, a little rally, basing, and then a strong drop in price. This one up here is likely to have a much better profit margin than this lower one. So keep an eye on those for short positions. Okay. If I draw a horizontal line in here and scroll all the way left until we find that line. There it is. Okay, so here is the area of focus for our demand levels. So be careful below, just below current price, okay? We've got this little area of congestion here, and I'd be surprised if you didn't get, you might get little tiny bounces in here. And then, of course, the one that has the potential for more, bigger movement is down here, okay? As a short-term trader in Forex, all these areas I'm putting in, most of them are pretty good for, these little bounces that we're talking about. Okay. Now, what am I really doing here? What I'm doing is just identifying little pockets of buyers and sellers. Because at the end of the day, that's the most important thing, right? Okay. Someone's asking if I prefer Forex futures. For short-term Forex trading, absolutely. Absolutely. I could not tell you how strong I prefer Forex futures for short-term trading. Okay. So, let's take a look. Let me bring up the euro now, but let's look at it through the futures. Okay, we'll go over a chart, and then I'll take you out and show you exactly where you can get all the information you need on the Forex futures. All right. Okay, so let me show you this. The ones that I trade more than anything else, Harley, are the euro and the yen Forex futures. So now we're looking at the euro again, only this time we're looking at it through the eyes of the futures. Remember, the euro against the dollar, whether it's the spot cash market, right, or the futures, it's the same market. It's still the euro against the dollar. Just one is the futures, one is the spot. What the futures are exactly, it's today's perceived value of this rate, this euro US dollar rate in the future. Okay. Fred, we're going to get to that in just a few minutes. I'm going to show you. I'm going to show you a website in a little section that'll give you all this information. I'll walk you through it too. Okay. So here's the Forex futures, and if prices come into one of our levels, I will do my best to take that trade in here as well. Going to draw these levels in again here, and I'm going to put this one right up here. And actually, because we're looking at the futures, we can go down to an even smaller time frame. So let's go down to let's use a 2-minute chart. I'm extremely comfortable trading off a 2-minute chart in the Forex futures, especially the euro and the yen. Okay, let me tighten up these levels a little bit. Okay, put some lines around these guys, and let's see if we can get a trade off here. Okay. And remember, with the Forex futures, you're trading through an electronic trading system called Globex. Okay. There we go. So here's our 2-minute chart of the euro. I'm in love with this lower level just because there's been so much trading activity there. I'd be surprised if prices just, blew through it. I guess, they could, but I'd be surprised. I'd be more interested in shorting against this upper level. Okay. All right. And if you wanted to tighten up the risk, you would just do that to the upper level. I just captured the chart again for you, though. Okay. So that would be a little 2-minute kind of bounce trade off that. And all I'm really looking for there is, 2 to 1 for just little bounces. Okay. So Bobby asking a good question here. Says, since spot Forex has very good liquidity, what benefits do the futures have over spot? One of the big ones, one of the things I'll touch on here though, since you mentioned it, spot Forex, you have, be careful, liquid. Yes, the entire market that the banks trade is very liquid, okay? But that's not exactly the market that's not the market that the retail trader is typically trading, okay? What I'm getting at is, for the most part, not everywhere, but for the most part, the market that the retail trader is seeing in spot Forex is a market that's made by the broker. Okay? So now that market is not going to get that far away from the real market, but at the extremes you'll see different bids and offers among the different trading platforms, right? It's the broker's market. Yeah, Andre just said in 2 words, but I just tried to say in like 30 words, so thanks for that. Does that make sense? Okay. Okay. For years, people were able to say this is the biggest market in the world and free, it's free trading, free commissions. Everybody was able to say that and scream that for a long time because the market was not that regulated. Now with more regulation, you don't see as much of that anymore. Okay? Whereas the Forex futures, it's the Globex system. You're trading through the exact same system that when you're trading or some of those markets. The NASDAQ futures, the S&P futures, the Euro futures, the Yen futures. It's all going through the Globex system. Okay? I'm going to show, I'll show a lot more information on that in a little bit. Okay? Alright, so that would be Euro there. Now again, let's put a line on the bottom of this chart. Let's see if there's any demand levels right here. Now I'm only putting that horizontal line on the bottom here as a reference point. So that when I scroll back to the left, let's see where that line comes in. 126.78. Hang on, I need to get a lot more. All right. Just a second here, and we'll get there. Oh, so this is good. This is good. Check this out. So anything below this horizontal line is exactly what we're trading into right now. Okay, now we're finding this data July 13th. Okay, July 13th of this year is when the euro was trading. So these are the levels. That's why you see how you're getting a little. Everybody see how you're getting a little bounce in the euro right now? Okay, because we're trading right down into this stuff. Okay, does that make sense? And let's see. All right, so you're trading right down into this guy right here with this just below it. So if prices can work their way down a little bit, again, because it's a Forex futures, I would be very comfortable. I just circled an area. Okay. Right there. Everybody see that circle? So this circled area is the next little set of levels that the euro could come down into. I'm not going to focus on this one because we've already hit it. We kind of missed this trade, right? Okay. So this circled area is probably the next area that I would focus on if you're looking for little bounces. Now, I don't want you, what it seems like I'm doing here is really suggesting that the futures are great for short-term trading. They are great for short-term trading. They're excellent for short-term trading. But by no means should you just focus on short-term trading the Forex futures. You can swing and position trade them. They're great. I mean, they're great for that too. It's not like one day trading is better than swing trading or position trading or anything. So, I just know a lot. The reason why I'm pressing this is because there's a lot of people that come into the Forex market. Put it this way. I meet thousands of people every year, and a lot of the people, and the people that I meet for the first time are typically, it's great for long-term trading, Boyke. It's great. Okay. But a lot of people that I meet for the first time, put it this way. Whenever we say 1,000 people I meet for the first time in the trading world at different events, expos, and things like that, a good percentage of those people are really excited because they're just getting into trading, and a good percentage of those people are starting with the Forex market. A good percentage of those people want to start out day trading, and a good percentage of those people want to do it in Forex. Does that make sense? So you can kind of see the big problem right around the corner, right? So what are they going to do? They open up a $5,000, $10,000 account. I'm talking about the average person. There's plenty of people that start with more. A lot of these people start with $5,000, $10,000, open up a spot Forex account. They start looking at 5-minute charts. And what do you think happens to the vast majority of those people? Right? That $10,000 quickly gets transferred into from their account into the broker's account or somebody's account. They lose it. Okay? And I can't stand seeing that. So, I would argue that, if you're going to, day trading is attractive for some people. Look, if you're sitting in front of your screens all the time, certainly do swing trading, position trading, but if you've got some time, there's nothing wrong with doing some day trading if you're doing it the right way. Okay? But I would argue that your chances for success in day trading Forex, at least right now, are much greater trading Forex futures. There are some limitations in the futures. No market is perfect. We'll get to those in a little bit. But for what we're looking at here, there you go, Janata. Yeah, exactly. Okay. All right. So I think enough of that euro. Okay. Now, before we go on to look at other charts, let's take let me share something else with you. Okay. Yeah. So prices are bouncing right off that little level there. We'll see if they can reach this upper area here. And we'll come back and start looking at the yen next. But I want to share something else with you here so we can get some more information. Okay. Now, just so you know, I feel like I'm sounding like a salesman today, but but trust me, I'm not. I have no relationship with the CME. I have no relationship with any broker. Harley, I see your point there. Scary that you can lose more money than you originally invested in futures, though. Yeah, be careful with that, because the thing is, in the old days, I suppose that could happen. Okay? Today, let me see here. So you have your margin, right? You have your initial margin, Harley, right? Okay? And then you have your maintenance margin. Okay? Do you know the difference? Okay. When you go below, let's say you're trading a futures market. Let me tell you how it works today. Okay? Everyone's trading through electronic platforms when they trade futures. So you have your maintenance margin, and let's just say, for example's sake, that the maintenance margin to trade whatever you're going to trade is for let's say €1. I don't even know what it is. We can look, but let's just say it's $3,000. Okay? Let's say it's $3,000, and let's say your maintenance margin is $2,500. So what that means is, to get started in trading that market, to do €1, you need $3,000 in your account. So then you start pushing the buttons. But now all of a sudden you get in a law, you lose, and you're down to $2,500. Okay? Let me tell you what happens. You are not even allowed to push the button anymore. I mean, you can push the button, but nothing's going to happen. Okay? And it's not like someone's watching your account in futures. It's all, set up electronically, right? You just automatically taken out of the trade if you're in one. You can see the margin requirements are in here, but I'm going to click on contract specifications. And here's the page we're going to spend some time on. Okay? So scroll down so you can see it. And this is where all the key information is on what these markets are. Okay. So first of all, when it comes to leverage, here's the size of the market that you're controlling with that, $2,000, $3,000 in your account. When I say that, that's just to trade one contract. Go to margins, performance bonds and margins to see exactly what that number is. But when you're trading a €1 contract, you are controlling you see contract size on the top? You're controlling 125,000 euros. Okay? So one contract is controlling quite a large amount of money. All right. Now you're using a margin account. So contract month listings. So a lot of people think futures are like options. They are not. Okay. The only thing they share with options is if you look at line item 2, contracts month listings, they have quarterly expiration. Okay. So these futures contracts, they expire. They have expiration dates. But unlike options, there's no time decay. Like, they don't lose value as they approach expiration or anything like that. Okay. They don't share anything else with options. These are not options. They're nothing like options. Okay. So March, June, September, December, which is the same as the S&P futures, same as the NASDAQ futures. So right now we're trading the September, euro. Okay. All right. Okay. Now, why did they even have expiration months? Like, in other words, why doesn't this thing just keep trading? Like, why do they have expiration months? Can anybody think of any industries or companies that actually would use this euro futures market in their business? Like why do you even have this market, period? Right. Who would take physical delivery of this? Yeah, absolutely. Banks are active in this market every single day, right? Okay. All right. If any business or industry that has made, part of their business is making a commitment to pay out currency or take in currency, right? How about importers and exporters? How about that, right? Okay. What if you took an order to sell a large quantity of your product, and now you were going to get maybe 20% of the payment now and 80% of the payment when you deliver the product 6 months later? Okay. Well, what are you going to base that on? You're going to base it on today's prices, right? Today's currency rate. But what happens if the currency rate changes in those 6 months? Which we all know it does tremendously, right? The only way to hedge that risk as a company is these futures markets. Does that make sense? Okay. All right. A couple questions came in here. Harley, groups like that would take physical delivery. Okay. We would never, someone asked another question, like, what if we hold this to expiration? Are we going to take physical delivery? In other words, if you forget to get out, is someone going to knock on your door and say, here's your 125,000 euros? Absolutely not. Okay. You're trading a margin account. Okay. Your broker would never let you hold that position, past expiration because, again, they would be at risk, right? If you don't have the money to cover that. Okay. In other words, in order to take physical delivery of this, you have to have, the money in your account to do that. All right. Jose is asking, are there mini-size contracts? Absolutely. The Forex minis are great. They're becoming very, very popular. Okay. There are definitely mini contracts for these markets. Okay. Okay. Let's see. You could, yeah. These major markets, Andre, do have options markets. All right. And I can tell you, I was trading Japanese yen options many, many years ago. I don't even know, 15 years ago, maybe more, something like that. I don't know. What was that? Yeah. Okay. Alex is asking a fantastic question. Can you make money day trading spots? So not futures, but the spot market. You can. The answer is you can. But your chances of success, I would argue, this is my opinion, are much greater doing it in the futures. Okay? For example, how many times have you picked a supplier demand level, a turning point, you've entered a position there, and then prices get to your level, it meets entry, you get stopped out, but then you look at the chart and you think, wait, it didn't even trade there. How did I get stopped out? Has that happened to anybody here? Alex, twice today? And you don't even see it on the chart, right? Yeah, that can't happen in futures, right? Things like that don't happen. Okay? Yeah, Harley, they're not going to be any faster moving than the spot, I would say they are, smoother. Okay? Now, couple things. Remember, I don't want you to, think that I don't want to make this sound easy. I don't want to make trading sound easy or anything like that. You have to follow the rules that we talk about in here. Pick the proper turning points, risk management, discipline, patience, take your stops, all that stuff. So, but again, there's just want to expose you to another type of markets. Okay. All right. So we are. Oh, let me take you back to this page for a minute. A couple more things to go over here. Okay. Let's see. So back on you should be able to see the website here. So this is probably one of the most important things here. I'm going to highlight this. Can you see what I highlighted? When I click on, let me do this again here. All right, so I can't highlight it, but minimum price increment. Does everybody see that in the middle of the page? Minimum price increment. Anytime you trade any market, futures, spot, whatever, you have to make sure you know what you're possibly making or losing per point. Right? So here, let me walk you through this one. So you see minimum price increment. So this first number here, 0.0001, that's the minimum price move for the euro. Okay? And I'll go back to the chart and show you that in a few minutes. So for every move, yeah, Harley's right, $12.50 per pip. Now, in Forex Futures, if you hear it called a tick, that's the standard lingo for futures, is a tick. Whereas in spot, we call it a pip. It's just a language issue. It doesn't mean anything different. They're the same thing. Okay? All right? Okay? So 0.001 to 0.002, that's a move of $12.50 per contract. So if you're trading 1 euro contract, every time that moves up, 1 pip, 2 pips, whatever, you're making or losing $12.50. Okay? This open outcry thing below it, that's that, there's still a pit session, okay, at the Chicago Mercantile Exchange. You still have a euro pit, but there's hardly any, there's not a lot of activity in there, so I wouldn't worry about that. I wouldn't focus on that. Below that is that's the Globex, okay, so you can see all the times in there. This market does not close too often, all right? And those are pretty much the very important things. Again, click on performance bonds and margins. I can do that here. Let me just show you where that is once. Okay. And let's see, when I click on that, let me get to the euro for you, and then I'll share it with you. In just a second. Okay, here it is. CME Currency Futures. Let's go down to E for euro. Again, I'm not going to walk you through every currency. Once you see how to do this once, you'll know all of them. Whoops, here it is. Okay, let me click this for you. All right, so you can see Euro FX, Euro Future EC. Does everybody see that one? Okay. And we're speculators. We're not hedgers and we're not members. Okay, we are speculators. So you can see the initial margin that you need to have in your account to trade one contract, which means you're making or losing $12.50 a tick or pip, is $4,050. Okay. If they will cut off your trading, though, if your account gets down to $3,000. Does everybody understand that? Okay. All right. Does that make sense? Okay. So again, that's the minute. Now, let me tell you this though. Hang on. I kind of misspoke there. What I said was 100% true, but this is from the exchange. Okay. This is what the exchange is putting out there. What the brokers do, okay? Yeah. Someone's typing it in now. Brokers set the day trade. Yeah, so those numbers that you see there, the 4,050 and the 3,000, for most brokers, that number comes down significantly for day trading, okay? Significantly for day trading, all right? So if you're day trading, check with your broker. It's different for everybody. That number comes way down, all right? Yeah, Jose, so the contract specifications page, like you're saying, there is showing the details of the instrument we would trade, the actual broker's platform. Yes, that shows the details, yes. What will change, okay, and Harley, I don't know if you're quoting a broker's prices there, limits, but yeah, that number comes, okay, so you are. All right, so 1,000 day trade for euro. Okay. All right. Some brokers will set higher minimum requirements. Most will set dramatically lower minimum requirements. Now, believe me, it's not that they're looking to take on more risk. They're going to watch your. Believe me, they're not going to let you go into. They're not going to put themselves at risk. Let me put it that way. So it's not like they're just dropping the limits and just. It's not like the Wild West. Okay. All right. So again, I'm trying to be really quick with this, so I can kind of walk you through it and get back to the charts. So go to the CME webpage if you have any more, if you want to check it out. You can always send me an email on that. Let's get back to the charts here. Okay. Yes, the mini, everything is much lower in the mini. All the numbers are much lower in the mini. You can find all that information on the website. Okay. All right. So let's go back to, let's quickly go back to the euro here. Euro futures. So prices are bouncing off that little area of demand that we found, and now they're moving up steadily. Okay. And not that close to the supply level yet, but this is a 2-minute chart, so we're not that far away. Why don't we click over and look at the Japanese yen? Now, the Japanese yen is also $12.50 a tick, right? Or a pip, whatever you want to call it. But not all these markets are $12.50 a tick, okay? For example, the British pound, $6.25. Okay, trades in half ticks there. Some of the others are $10 a tick, right, or a pip. Okay. Here's the JY. That's the Japanese yen. I don't see a whole lot here on the 2 minute. Let me get you another time frame here. Let me do this just a second. Based on where we're at in the big picture, you know, anything above 117.05, I'm probably gonna be looking for a little small time area to short, right? Oh, no chart yet. Actually, let's go to the British pound because the yen is the same price point. Let's cruise over to the British pound futures. Okay. And again, I know I said this before, so hopefully you don't get annoyed with my repetition, but I'm not trying to push anybody into day trading. I just know that there's a desire for people to day trade futures, day trade Forex. So I just want to offer you, you know, another way, maybe a little easier way, and in many ways a safer way to day trade Forex. Okay, that's all. Okay, so here we have the British pound, and looks like it's coming into a little 5-minute level here. We just have to be careful because demand is too close at this point. We probably want to settle in on a supply level a little bit higher on the supply demand curve here. Okay, and let's see if I scrunch up the 10-minute chart here. I'm sure we'll find something, or even this 5-minute. Yeah, what I'm struggling with on this 5-minute, there's lots of good levels, but price is pulled back into each one of them. I guess I could put some of those in while we're waiting for price to do something here, just to show you. Okay, now because of where this British pound is at in the big picture, and you can see on the lower right chart, you'll see what I'm talking about there. Right? Remember we talk about the supply-demand curve all the time? Okay. And so these levels I drew in here, again, not to just talk in hindsight, I don't like doing that, but we're just waiting for something to come up. You see these levels in yellow, supply levels in yellow, the first pullback into those areas are entry points. Okay? Now in the spot market, on a time frame that small, a lot of times you're going to shoot right into that level, but the future is a little bit different, okay? So, perhaps this, this level up here, this first supply level I drew in, you know, if prices go up there again, might be able to take another position at that area, okay? Or maybe even the levels just above it. Again, it looks like I'm being, I don't want to kill you with my details here, but this little area up there. Again, this is what I'm talking about here is short-term trading. The swing trading side of things, it's all the exact same concept. We just do this in bigger time frames. Okay. Carol, this is what you would be trading here. If you're going to look at another market, I think is kind of what you're getting at to help gauge where this pound is going. Take a look at the chart in the upper left corner. That's the only chart on my screen that has not been changing. That's a chart of the U.S. dollar index. Okay? So in other words, if you're going to short the pound up there, be nice if the dollar was into a little demand level. That's all. Does that make sense? Okay. All right. Okay, so that's the pound. You know, I just noticed here on the 10-minute chart, the pound is, you know, I think a lot of people are probably looking at this level here and saying, well, why aren't we shorting against this? Prices could certainly fall from this level. You know, I'd say it's an okay trade, but certainly not a great trade. Let me grab the chart again. There you go, that chart in the upper right corner. Okay, the reason why I wouldn't take a position there is because demand is too close. Look what's right below it. Okay. Jose, we're looking at shorts just because in the bigger time frame, the daily. Look at the daily chart here, lower in the middle. You know, look at current price and look what's sitting right above. Okay. In other words, on this daily chart, the reason why I'm hoping for a rally in the British pounds to get a short off, I'm going to put a black line right there. And if we look above current price and we look below current price, take a look at that daily. Right? Okay, what's the path of least resistance in the pound? Does everybody see that daily there? Absolutely, Boyke. Works anywhere. Does everybody see this daily? You know, why I'm kind of leaning to the short side, or why I'm interested in looking for shorts and not longs, right? The path of least resistance is lower. Okay. All right. Any other questions on this? All right. Targets. Yeah, your targets would be your opposing demand levels. So let's say this area up here, the 155.50 area met entry again. Okay. And let's assume that it's going to rally up there from here. I don't know that it will, but you see all this congestion around 155.10? I'm going to put a blue line in here, right there. Okay. So that would be the target. Let me draw that in for you. All right. So if this thing rallies up and the short works out, I would make this blue line the target for it. Okay. Be just a little above this what will be demand. And you can see this 10-minute now. See how it's bouncing off that area? Okay. Yeah, Jake, I think that's probably best left for another session because we spent a lot of time on that in sessions, and it's such a powerful way of doing it. Again, I can't remember a time where we were. I'm certainly not someone that pats ourselves on the back that much, but I can't think of a time where we were actually just wrong doing that whole path of least resistance thing. Remember, this whole game of price movement is just motion into mass. Okay. All right. Yeah. So this 10-minute level you can see is working out pretty good. Again, you don't need a big move in these markets to do. You know, if you're picking the right levels, the probability is high that your batting average is going to typically be pretty good if you're picking the right levels. Bounce rates at $12.50 a tick or pip. You don't need a big move to make some money. Again, here we're doing $6.25 a pip. Okay, so from this 55.22 down to 55.10 times $6.25, now 9. That's where you're at. Does that make sense? Yeah, let me put my email address in here. All right, there's my email address, Seiden@tradingacademy.com. Remember, your stop is just above the level, okay? Again, the reason why I'm not getting into those details is because the last two sessions, that's what we've hammered on, is identifying supply and demand levels and the exact rules for entry and all that, okay? So, I know we're kind of out of time here. Seiden@tradingacademy.com. Boyke, because that target, if prices go up to that supply level, that target will be just before, the demand area down here below all this congestion. That's all. Okay. We can explain that further next time. All right, so again, Seiden@tradingacademy.com. If you have any questions, hopefully that was helpful. I talked really quick because I know we didn't have a whole lot of time there, or I want to get a lot of stuff out. So this session is recorded, so feel free to go back and watch the recording again. Hopefully that was helpful. Thanks for your time, everybody, and have a great weekend.